From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. And Nadine, we did see a little bit more brightness on the market today.
Yeah.
This time yesterday wasn't looking that great.
It was not, but today's a new day. And look at this, not a lot of movement if you look at it from about 10 a.m. Up by about 0.4% for the CIBO Australia Index. The S&P ASX 200 is sitting at 8,397. Just though casting my eye towards the US, and I know this is not a blueprint for what will happen, but we do have pressure coming through on S&P 500 and NASDAQ E-minis today.
Yeah, when it comes to today's session, though, it really was a lot about the retail rally. So we'll get to web travel in a moment, but that helped push up the consumer discretionary sector. You also had inflation, I guess, the headline number remaining fairly steady, although we'll get into the underlying figure, which is still a little bit above what the RBA is looking for. But a lot of good movement from the likes of retail players, not only in that consumer discretionary space like web travel, but also some of the other retailers too. And then, of course, we had our friends across the ditch, as we like to say, cutting again by 50 basis points.
50 basis points and giving a lot of forward guidance. They do expect to cut again in the new year. So quite a stark contrast between the headlines that are being written about our own RBA. You know, saw another note come out from Paul Bloxham at HSBC. He's the chief economist here in Australia, just saying that, you know, second quarter at best for an interest rate cut to come through. We still do have some of those energy rebates helping to hold down that headline number, and it's the underlying number that's been proving to be very sticky.
Indeed. And you remember Paul was one of the first that sort of floated this idea that maybe the RBA doesn't join the global easing cycle at all. I put that question again to Phil O'Donoghue from Deutsche Bank because I spoke to him after the inflation data. Great conversation online, of course, ausbiz.com.au. He said, look, and now I've got to remember the exact quote. It was such a good one. Look at me losing my train of thought. But he said something like that is just not likely to happen. That is going a bridge too far for us not to have any rate cuts in 2025. I got there.
Yeah, you always do in the end. All right, so look, we'll revisit the big picture with our expert guest, Mark Gardner, who's coming up shortly from MPC Markets. But I think it's worthwhile to take a look at some of these market movements. We'll read them out for you. JB Hi-Fi up close to 0.7%. I mean, and this is even on a day when we're talking about the RBA finding it very difficult to cut rates. Premier Investments up by 2.5%. Lavisa 2.66% to be exact.
Indeed. All right, let's have a look at the banks. CBA coming back 1.6% higher today, $156.96. Interestingly, Macquarie Group, which was the only one to rally yesterday because of its exposure to the US, today took a little bit of a backseat, down a third of 1%.
But I mean, Commonwealth Bank up 1.5%. I had a good chat with my guests on the call today, Henry Jennings from Markets Today and Francesco Distratus from Ord Minnett. Yeah, they comment on Commonwealth Bank and the banks in general. And there were a couple double buys in that program as well, Jules, if anybody wants to have a listen.
All right, and gold players very much doing some heavy lifting today as well, especially some of these smaller players, Evolution, De Grey, Northern Star, all looking higher. Let's get into the corporate stories though, and we talked about web travel. First half underlying earnings down, but the point was that it booked this profit of $52.5 million for the first half underlying profit, and that's less than 2 months after the demerger.
Yeah, and this was also Web Travel Group that downgraded dramatically in October. So my guest earlier said, you know, this might be a case where it's down by the elevator, up by the stairs. But the brokers have come out, you know, UBS still has an outperform rating on the company. Ben Wilson from Wilson's Advisory saying that, look, the indications are today that the picture is brightening for FY25 and FY26 as well. HMC Capital as well updated the market at its AGM today. Operating earnings going really well, tracking 52% above the trading update that was put out just late October, 89% above its FY24 record result, and it's really talking up the contributions of that soon-to-list Digico REIT and what that will do for assets under management.
Pro Medicus heading the other way, even though it did sign a 5-year, $24 million contract with New York University's Langone Health, and this wholly owned subsidiary of Visage Imaging will see its Visage 7 open archive system deployed in the cloud, the contract being a transaction-based licensing model.
Yeah, Aussie Broadband looks to be conducting an on-market share buyback, 10% of issued capital, and it's going to begin that next Feb.
and Linus rose, but it did pour cold water on the prospect of stabilised prices for rare earths, warning that any calming of market volatility contingent on the overall Chinese economy.
Yeah, I'd call it Supply Networks as well that rose significantly on its upbeat earnings guidance. So there was quite a lot of news in the small end of the market, including Orthocell. It hit a five-year high on that Singaporean expansion deal. And Harvey Norman, it did have that upbeat October quarter revenue outlook. So plenty to discuss today.
All right, let's do it all with our Wednesday guest. Hi, Mark Gardner from MPC Markets. Your thoughts on the rally we saw from consumer discretionary stocks today?
It was all really in the ones that have been probably a little bit under pressure, to be honest. It's all sort of, JB Hi-Fi's only up 0.5%. But Harvey Norman bounced back, Lovisa bounced back as well, but they're significantly off their highs, whereas JB Hi-Fi, I dare say, would be very close to 52-week highs, if not at them. So I think it's been a tale of the haves and the have-nots in many of these sectors. If you've been on a good run and you've managed to report consistently and beat expectations, you've absolutely shot the lights out. But if you've made one small mistake, you've been absolutely punished in this market. So I think this is probably having those laggards pick up a bit of the slack is probably a pretty positive sign that it's a broadening rally. I think that it looks a little bit exhausted, the Mag 7, and I think there's that rally in the US is starting to broaden out into the smaller caps as well. And I think we're far more correlated to that broader rally, the ASX 200 particularly, than we are obviously to the S&P or the Nasdaq, just due to that concentration of those top 7 stocks. So I think what we'll probably start to see those market darlings get to an exhaustion point, and that broadening starting to happen here as well at some stage. So there's bargains out there to be had. There was some pretty decent up moves in quite a few of the in the smaller cap names in recent times as well. So some of them are a little bit deceiving, because I think quite a few of the stocks that have performed very well today have, if you broaden out the chart to a week or two, have probably
underperformed.
They're probably just picking themselves up off the ground and dusting themselves off a little bit. So and I think with Pro Medicus today, albeit where they're valued at the moment, they would need about 20 more of those contracts to justify where the price is. So I kind of get why they're priced at a valuation now where just delivering is not enough anymore. We're talking 150% rally in 12 months, or probably even 6 months, to be honest. I think it was around about $80 before earnings.
Yeah, well, the S&P 500, I mean, when you think about it, it's the best performing year in like decades.
But
literally.
two 20-plus performers in a row. So,
but when it comes to this week in the US, I was speaking with Steve Slosnick from Interactive Brokers, and he said, look, Wednesday people are checking the travel reports and the traffic reports. They're not checking the markets. Of course, Thanksgiving Day holiday, bigger than Christmas in many ways in the United States, at least for travel. So, I mean, it's going to be sort of slow going to end the week, you think?
Absolutely, yeah. Thanksgiving, in terms of the lead from Big Brother, it is to be honest, from my trading days, I would take Thanksgiving off, and you would trade the days that it was open into Christmas and after Christmas between New Year, because they were much busier and more liquid times. So this week particularly, well, we organised our Christmas dinner for our staff, tomorrow night, because we know we know that it's going to be dead as a doornail on Friday and probably Monday as well. So traditionally it's always very quiet. I think it's rallied somewhere between the 1 to 1.5% mark 4 out of the last 5 years. 2021 it was down 2%, but it doesn't tend to move a huge amount, and it's super thin volumes. So whichever direction it's going, basically at this point, which is just grinding higher, no matter what's thrown at it, despite Trump and the tariffs and things, it still seems to want to keep grinding higher. It'll probably just continue to
best
do so.
year since 1998 for the S&P 500.
Wow.
What's it? Sorry, best year.
Best year, yeah.
It is a melter.
Spring chickens.
I wasn't even born. No, I want to ask though, on that theme, about whether or not we've seen the Santa Claus rally then because of the Trump trade. Have we sort of got ahead of the game already?
I wouldn't bet against this at the moment. I don't look. I mean, if you look at what has been thrown at this market in the last 3 months, we've had intercontinental ballistic missiles from Russia. We've had the Middle East. We've had 2 major hurricanes. We've had an election with what was regarded as an unexpected result, and some fairly interesting policies already being pushed through, and this thing just keeps grinding higher. So I don't expect anything to really change too much until the inauguration. I sort of noticed on financial media, there is a lot more talk about broadening out of the Mag 7. People are starting to worry about that. And I was genuinely surprised at the positive reaction to the tariffs last night, because it's not good policy, and particularly Canada and Mexico, they get a hell of a lot of their food from Mexico. So whether that actually happens or not, I mean, statistically...
They got a lot of agriculture products from Canada. They get a lot of beef
and critical
from their
minerals
neighbours
as well. So it seems like one of those, 9 out of 10 things he says don't actually get executed. I would say that those 2 probably fall into that category.
Well, I don't know. I've read a note from Nathan Smissendarm from Deep Data Analytics, and he was saying, no, he did put the tariffs on last time as expected. It wasn't really a negotiating tool, but he said, when Donald Trump was pointing at China for not stopping the illicit drug trade between the US-Mexico border, he was like, come on, guys, you want to put tariffs on China? Just put tariffs on China. That's a hard line to draw between the two.
But look, if he goes down that path, I think there is a very large chance that Australia does miss the easing cycle, because they're going to be, and we may get another 25 basis points, but in the US, but it's just going to bring inflation back really badly, and that's all they've been trying to control at this stage. And that's no good for that's obviously has a knock-on effect. It's no good for the spiralling US debt, because they're having to pay higher rates to get themselves out of trouble there as well. So, I mean, every economics book in the world pretty much warns against tariffs, but he thinks he's different, so we'll see how that basically plays out.
He is different.
Well,
Let's give him that. Let's give him that.
He's different, unorthodox, but and I think whilst he's had some appointments have been quite positive, there's been some very questionable ones as well. So I think at this stage, until we get the inauguration and see what's actually going to come into play, it probably just continues. But I wouldn't expect. Certainly not the rally that we had the Christmas rally that we had last year. And if it happens...
What was the Christmas rally last year? Do you remember?
Well, we bottomed basically at the end of October, which made it look like a spectacular Christmas rally, because I think it was about 20-odd%.
Yeah.
So I wouldn't expect the same, because we had the seasonal strength, which was very odd, particularly in an election year in the September-October period.
This year.
So I would have thought that it'll be interesting to see the Black Friday numbers, particularly. They'll be really closely watched. And obviously the travel numbers and things as well. So but I think something like Webjet, for instance, that was just way too hard done by. And basically I think everyone was looking at the Tabcorp TLC trade and going, you just get out of one and get into the other at all costs. And I think they've sort of overlooked the fact that it's still a decent quality business, and was probably undervalued with that result.
All right, Mark, always a pleasure. Thank you so much. Mark Gardner from MPC Markets. You were on the call today.
Well, and it's a good segue between what Mark was just saying. Dovetails nicely with the commentary from Francesco De Stratis from Ord Minnett and Henry Jennings from Marcus Today, who called it a big buy.
We've got a buy on the stock. I think you'll find that the earnings will jump around a bit. It's difficult to get a handle on some stocks that demerge, so the earnings expectations are going to jump around. I think it gives us some time, will give us some consistency. So there's still a fair bit of risk in these 2 stocks, if you like. This is the business to business one. I forget the name of the other one. It's the business to consumer. We're probably going to see a little bit of moving around of analysts' expectations and guidance over the next 12 to 18 months. But if they can kick some goals, I'd expect that share price to rally. So I don't disagree with the buy recommendation that our analysts have on it.
I think this one is a big buy actually at these kind of levels. I can see this one going back to $6 in the blink of an eye, to be honest. The downgrade was obviously, part of it was uncertainty. 150 million buyback. And I got to say, I think this one is a big buy. So I'd be pretty happy here, even though it's rallied 12, 13% today. I can see this one going to $6. You know, we may pause a little bit and consolidate after the run today, but I would imagine brokers are going to feel a lot more comfortable with this Humpty Dumpty one after today.
So that's a big buy. I think that's new vernacular, new 2-hour, the call vernacular, which is special at the best of times. So let's get across some of the leaders today. I usually get the laggards, but I'm getting in here early. There's Web Travel Group up by close to 14%. Life 360 still filing. Quite a lot of paperwork, and there was some significant buying in the States, up by 5.5%. Domino's, no news that I could see, 4.6%. Ampol, got to mention in the call today if you'd like to have the listen. Also Viva Energy.
All right, to the downside today, Pinnacle Investment was off by 4%. GrainCorp, you were talking about that on the call as well, weren't you? Down by 4%. There were some bigger losers than that. Perhaps they were in the smaller end of town. So we might flip and have a look at the winners in the small end of town.
Yeah, we already mentioned Orthocell, which has inked a Singaporean deal, and Motorcycle Holdings, interesting to see it's up by about 13%.
And in the small end of town, in terms of the laggards today, we mentioned Novonix. It did a share placement, 60 cents per share, closed at 76 cents. Lindian Resources, BetMakers Tech. And I noticed as well that City Chic Collective was down by something like 26% after a trading update at its AGM.
Yeah, that's a retailer that has had a very rough run for quite some time, got stuck with a whole lot of inventory, and has really just struggled along since. So with all of that behind us, that's the day done and dusted here in Australia. We've got plenty of data that we'll be hanging our hats on tomorrow morning, including GDP in the US and also the Fed's core PCE price index. Now, it's not coming from the Fed, but the Fed loves this one. And so that's a big read on inflation. And we get pending home sales, durable goods, as well as income and spending.
All right, tomorrow we have got Michelle Bullock speaking. I think that's about the only thing that's happening, and it's actually going to happen at night in Sydney at the annual CETA conference. So not a lot, but we'll of course be reacting to the US GDP and the core PCE data. And what occurs in terms of as well this potential ceasefire agreement being reached too, which could have big implications, of course, for, well, let's hope for humanitarian peace, but also for the energy market.
Yeah, certainly so. Yeah, I know we had inflation today, but it's been a strangely quiet week on the economic front here locally. So yeah, if we take a look at where we ended the session, up higher. So nice to see, up by about 0.5%. The ASX did a bit better than what you see on your screen there on the SIBO. The ASX was up by 0.6%, 8,406. Bitcoin is mushing higher right now.
Oh, what's Bitcoin
it's at 92,539. So that's been pretty volatile this week. Clearing the air, clearing the decks perhaps for another attempt at the 100,000 mark.
Yeah, we've all become crypto experts. We just go from political to geopolitical to crypto. But obviously a very, very big one in terms of, I was talking about myself, I wasn't going to go at you.
Oh no, I think it's like everybody out there. It's what the keyboard warriors have done to us all, right?
Yeah. All right, well that does it until we join you from 9:45 a.m. Eastern tomorrow. And speaking of tech and crypto and everything, we're going to be speaking to Dan Arts tomorrow.
Oh, good. Yeah, look forward to that. And don't forget to sign up for our Cyber Monday event, stocks on sale, ausbiz.co/cyber. We'll see you tomorrow.